All right, let's keep this thing rolling and jump into building your risk profile and risk management. And this might be the most important video of this entire series. I certainly believe it is. If you don't get this part right, you won't be in the game long enough for your edge to win. So what is a risk profile? It's your operating system. Without it, you're just winging it. You're gambling, and I fucking hate gambling. I teach edge, execution, and capital growth. And we do that through risk management first mindset. Okay? It's the foundation of long-term success. Understanding how to manage risk will keep you in the game so that you can keep having at-bats and keep swinging. If you haven't proven that you can consistently beat the market annualized, so if the SPY is doing 8-10%, if you're not outperforming the market, you have no business risking more than 2% per trade and a combined 10% of your total account value at any given time. Okay, I'm sure plenty of people are going to ask, well, what should I risk per trade? We'll get into that a little bit here, but that's a general rule first. Until you've clearly proven to yourself with data that you can outperform the market, that you have an edge, do not risk more than 2% per trade and never have more than 10% exposure to the market at any given time, unless you're just going to dump it in ETFs and just keep up with the market. But if you're going to try to speculate and personally outperform the market, you need data showing that you have an edge and that you can stick to it over time. And then we can talk about bringing that scale up and rolling into an accumulation phase. Oversizing doesn't just cost you money, it kills your confidence and your momentum. You start second guessing the strategy even when you know it works, okay? The triple R, you look at the charts, you know this thing prints, it's structural, it's how the market moves, right? We're not arguing or fighting for an edge anymore. I know I've been there. I had edge early in my career and I got distracted. I wasn't managing risk. I didn't have a risk profile and I blew accounts and it caused me to spin my tires for years, okay? It's the worst. You get into a position without proper risk management and all of a sudden it goes against you, you're stuck holding a bag, your capital's tied up. It's the worst. You can't do that. Don't do that. You've got to protect your ability to trade, to keep swinging. So we'll touch briefly here on sizing, and please send me a risk profile and we can work together on how we can break this down for you specifically. But a general rule, if you have proven the ability to outperform the market for a sustained period of time through real trading data, not paper trading, if you can outperform the market, then I would say if you're in an accumulation phase to break it into 10 equal parts. And each trade is one unit, one of those parts, 1/10 of your portfolio, okay? And then your max exposure should be 5 or 6, okay? So 50 to 60% is full exposure, right? I'm all in, I'm fully exposed. I'm at 50 or 60% of my total account, and that protects me. That helps, that allows me to sleep at night, right? Because macro events do happen. They will happen. Trump tweets do happen. You can't predict this stuff, but you have to be protected, okay? And you do that by sizing properly and never going over your max exposure. I don't care how much you think everything's gonna run or go to the moon or whatever, I don't care, okay? You can use leverage in other ways. I use options, all right? But I am never over my max exposure of 5 to 6 units, 50, 60% of my entire portfolio. If you're working with larger capital, then consider bringing that number down, but that's my general number that I give people. And like I said, reach out and we can discuss where you are and what your goals are and find a position sizing that matches your intent. Something that is extremely important to do along with your own risk management is assessing the market risk profile. I have an ABC system that does this, and it's how I assess the market, and I adjust my sizing and scaling to this. So a risk profile is full throttle, max exposure. I'll take on 5 or 6 full-size positions, or 2 or 3, and I'll do a double or triple unit on those 3. But again, I'm never exceeding a certain amount of total portfolio exposure. A B market risk profile, I'm far more selective. Maybe I'm positioning or I'm entering at half size. just fewer positions or smaller positions in a B risk profile. C, I'm quite defensive, considering maybe going flat. I'm waiting, I'm watching, I'm considering positions, I'm looking at market breadth and larger levels and seeing where we find support, or waiting to get back on trend to move up to a B or A risk profile. So I adjust my exposure based on the environment, the market risk profile. I align my personal risk profile with it. The goal isn't to trade more, it's to protect your capital when the conditions are weak and to lean in when the market condition is strong. Once you have an edge, trading becomes math, not emotion. This is a game of probabilities. Your risk profile allows you to do the math and project where you could be should you stay on course. For example, with the Triple R setup, I'm able to enter 3 trades a week, and each trade is a 2R with a 65% win rate, and I'm making $1,000 per trade, right? It's this sort of math that you can begin to project where you will be as long as you stay on course. And following a risk profile and sticking to a strategy is what allows that to happen. It's what makes it real. And that's how I've doubled my account this year, and I'm on track to triple it in 2025. It's because I know my data, I stick to the plan, and I manage my risk. I trust the system. You need a system for tracking your trades, and not just wins and losses. You need to be tracking the setup, the risk environment, your entry, your stop, your targets, executionary notes. Where was your mind when you took the trade, when you exited? What was the macro environment? What was the market risk profile? Where was this trade within your own profile? We need to be logging all of these things. Okay, data is your edge. If you don't track, you're gambling, and I fucking hate gambling. So here's what I ask: build a risk profile and submit it to me if you want my help. I will lean over your shoulder and I will give you feedback on your trades. I will mentor you and help you get to where you are a self-sufficient, profitable trader. That's what I want from you. But you must get your risk profile built out, and you must adhere to it without question. And you have to submit that to me so that I know you're serious about this and you are taking capital allocation serious. You're not just gambling. I fucking hate gambling. So again, submit your risk profile to me and I will work with you one-on-one. That is what I love doing. Ever since I got into the market, I always envisioned becoming the kind of trader that could help others, because I am fascinated by the market, and I'm there now. But you have to show me that you're serious. You have to submit me a risk profile. If you don't know your unit size, your total exposure, or how to adjust to the market, I can't help you, okay? And more importantly, if you're not managing risk, the market will punish you. It's a matter of time.